So what does having bad credit actually mean? When someone tells you, whether it's a lender or somebody who pulled your credit, like an auto dealership or whatever, and they may be so bold as to say that you have bad credit. Well, what does that really mean? Well, it's not just a low number or low credit scores, it's actually a signal, okay? So it tells lenders that you've had trouble managing financial debt and borrowed money in the past. And it makes you a higher risk to borrow money today, okay? So what is considered bad credit? I'm gonna share with you the scores. So typically, credit scores that are bad range, actually, let's go back to this, okay? Credit scores range from 350 to 850, okay? Roughly. Now, I haven't seen, when I was a mortgage rep, I haven't seen credit scores as low as 300, but that's apparently the range, okay? Now, a bad credit score is anywhere between about 620 or less, okay? In my example, it says between 580 and 620 is the most common bad credit range. But if you're at 620 or less, I can tell you as a former lender that anything less than 620 gets you the higher interest rate or a denial on your loan, okay? The lower the score, the more concerns a lender will have. Now, what causes bad credit? Okay, how do you get bad credit? It doesn't happen overnight, but it usually comes from patterns, late or missed payments, accounts sent to collections, loan defaults or charge-offs where you haven't paid it, high credit card balances relative to limits, okay? Meaning, let's say you have a credit card with a limit of $2,500 and you maxed it out, okay? That is a pattern. And then bankruptcy. Bankruptcy is a big one. It's rarely just one mistake, though. Many times it's repeated financial strain or unmanaged debt, okay? So what bad credit means in real life, I have some examples here, okay? Bad credit affects more than just loan approvals. It can lead to a denial and a job offer, all right? Many employers are actually pulling credit for potential hires, I should say, okay? But bad credit affects more than just loan approvals. Higher interest rates on mortgages, car loans, difficulty qualifying if you're looking to rent a home or apartment. Sometimes you have to put down a larger deposit with poor credit for utilities, okay, heat, energy, things like that. You typically pay higher insurance premiums in some states, which I don't think that's fair, right? But whatever. And then limited negotiating power in financial decisions. So in short, right, bad credit makes everything more expensive. The good news, though, is that credit's not permanent. You can raise your scores, okay, with consistent on-time payments, lower balances, smart debt management. Scores can actually improve and boost you up, sometimes faster than you expect. There's light at the end of the tunnel if you apply these habits, good habits. Bad credit's not a life sentence, okay? It's a snapshot of financial habits that can be changed. I hope you found this episode valuable. Go ahead and share your thoughts in the comments. Have you been in this situation? Would appreciate it if you let that out. Not a big deal. Otherwise, I will see you guys on the next episode.